Yo, what is going on, guys? We are back with another video, part 3. Okay, that's enough, sorry. Okay, but guys, welcome back to the part 3. Okay, this is going to be huge for you. This is going to be pretty dang gold, if you ask me. So, I better see you paying attention, okay? So, as you can see, guys, we're going to go ahead and look at liquidity. All right, so I have this indicator here. It's called trading sessions, okay? Usually I'm not that big of a fan of indicators, but I like this indicator a lot because it shows you the sessions, okay? And when it comes to finding liquidity, you got to know the 3 sessions, okay? There's 3 sessions, okay? There is London, right? Or actually, start easy. You're probably in the United States, which I'm in the United States. So there's New York session, okay? New York, there's London session, and there's Tokyo. Okay, there's 3 sessions, all right? So I want you to know that there's 3 sessions, and what this indicator kind of indicates those sessions for you, so you don't have to look through the time. So if I turn this thing bad boy on, look at this. It highlights Tokyo, okay? It highlights London, and then it highlights New York. And New York and London, actually, they overlap in time. Right when New York opens, they actually overlap for around like 2 hours, I think, right? Yeah, 2 hours or so. But so basically, finding liquidity, guys. Okay, liquidity is a zone or an area, right, based off the candlestick charts, right, where price goes to and sweeps that area for a possible reversal or a continuation per se to the upside. So we're gonna look right at these highs and lows here. So I'm gonna go ahead and go in each session. Okay, so this is Tokyo session, this is London, New York again. Okay, so we're gonna identify the highs. Okay, so let's go ahead and identify Tokyo high first. Okay, and Tokyo low. Okay, so price, right, made a low in Tokyo first thing when price opened there at Tokyo, right, 4 o'clock p.m. 4 o'clock p.m. Pacific time. Actually, if you're in New York, it should be 7 p.m. around like 7, or actually, yeah, 7 p.m. So, and then price makes a high, okay, comes out. After Tokyo closes, price identifies liquidity, which is these highs here, okay, that we marked out with these highs. So price kind of retraces back to that area, sweeps liquidity, and reverses, okay? So it sounds a little confusing at first, and I know as a beginner it is a little confusing. It will be confusing, but simply liquidity is just a high, okay? A previous high in the markets that price got to now, okay? So like, for example, this high that I marked out in Tokyo session, okay? Price later on came back to that area, right, and reversed from this high after it swept the high. So that's called liquidity. It's simply a high that you mark out that price got to and reject or continued off from. Pretty simple, right? So let's go ahead and look at London. Okay, we're going to look for the lowest low during London. So the London session, right, is from this high of the box to here. So we're going to identify the low of our session before New York opened, actually. So I like to identify liquidity point in New York session. So when I identify liquidity, right, in New York session, I like to go back to London lows and highs to indicate what New York is likely to hit. Okay, I know it sounds a little confusing, but let me break this down. So London, right, got the high, and I don't like to identify the low. I want to mark this out just because it's in New York session. Okay, so I would probably go from this high of the box to down here. I'm gonna mark out the low, which is this low. Okay, this low right here. So I marked that out, as you can see, and we're also going to mark out the London high right here. Okay, so we got a high and a low of London. So what does price do at the opening of New York session? Okay, price in the New York session comes up, hits this high, and reverses off of it. Okay, this is called liquidity. Again, pretty simple. And then what does price do? It's attracted to this zone. Okay, so price comes down, hits this liquidity, bounces off, but then continues to the downside. Okay, so when price reaches up here, looking for more shorts, and then down here, looking for potentially more longs, but it just depends on your strategy and your bias for the day. Okay, but we want to kind of look mainly. As a trader myself, I'm a reversal trader, so I like to see when price hits liquidity here, and then I go ahead and with my confluences too are like things that you indicate in in a specific time frame that what price will make a move from. If that's I don't want to make it too confusing for you because I know you're a beginner if you are watching this video, but simply it's just having confluences in your trading. Oh my goodness, I need water right now. I have water right here. So when you're trading, you want to obviously have a bias. Okay, you want to have confluences. Okay, if you're trading, so you want to know why price did this and where price is likely drawn to. What is price drawn to? Liquidity. This is what you're getting taught right now. Boom. Gold, guys. Gold. Hit this like and subscribe button. Nobody's teaching this crap that I'm teaching you so fast. Like, I'm teaching this crap so much faster than other people are. This is video 3. We're only 6 minutes in, and you already know this. That is insane. Okay, I use this for my strategy every day, this trading session, and I just identify the low and the high. Okay, price sweeps that. Boom. Okay, reverses. Boom. Pretty easy. Okay, now same thing. So now let's go New York session. Okay, we got the low of New York, and we got the high of New York right up here. So price comes up. We're waiting for price to hit it. Let me get rid of this. Okay, price comes up, hits that liquidity. Boom, comes down into Tokyo session. After Tokyo, it hits the Tokyo high. Right? And it hits this high of Tokyo. Then comes down, London session, a low. Kind of faddles around. Okay, what does price go to? These London highs, right? Which then continues off, right? Because this is our liquidity. So price is drawn to this high, as you can see. Okay, pretty simple. This is called our liquidity point. Okay, if you don't understand this, go ahead and watch the video again and practice on your own, because this is the trading session right here. The indicator, you can just search up on indicators, trading sessions. Okay, right here. Okay, pretty simple. If you ask me, pretty simple like a dimple. Remember, guys, pretty simple like a dimple. So let's go ahead and identify one thing, right? Identify some liquidity. So we're going to go in the 5 minute. Let's go back in time and let's turn the trading sessions on. Okay. Perfect. Actually, you know what? Let's go replay mode. I'm going to close my eyes. Okay. All right. Okay. Wherever we are. Okay, cool. Tokyo. Session. Okay, let's actually keep going a little bit just because I want to see. Okay, here's London. Cool. I like to see the London highs and lows. Okay, I'm gonna talk right now because my throat is jacked up. Okay, so we got some London, right? Lows and highs. So I'm gonna go ahead. I like to trade the morning session. So I'm gonna wait till around 6:20. Yeah, 6:20 right here. Okay, cool. So we have a London low, in London. And we got a high in London. So we're going to wait for price to retrace to any one of these highs or lows. Sorry, high or low. Okay, so let's see what happens. New York opens. Immediately it's drawn to this high first. You can see. So price will definitely go to this high. Okay. It will get to see right there. Boom. See? And then what are we looking for? We're going to look for confluences on the smaller time frame for entries. But I'm going to show you that later on. I don't want you to get too confused because in this video, we're just looking at liquidity. Okay, so hit our high. Then what happens next? Now it's going to either come down and retest this area, come up, or come down and reverse down to this low and hit this low. See what happens here. Okay, comes down, retests that on this candle, climbs higher. Okay, retests it again, climbs higher. Higher, see, and it goes higher, then eventually it hits something, then market goes lower, right, and rallies. See, this is just a kind of a area that we know price is drawn to, because price, guys, is drawn to liquidity in the markets. Okay, write this down because this is going to be huge for you right now. Liquidity is drawn to two things. Okay, or not liquidity, I'm sorry, oh my gosh, scratch that. Okay, price is drawn to, right, two things. Okay, liquidity or inefficiencies. Okay, and an inefficiency, guys, I hate to leave you off a cliffhanger, but I'm going to show you all about inefficiencies, fair value gaps, and all that types of stuff. Okay, I have videos on fair value gaps, but I'm going to make another video of them again because that's what price is drawn to. Price is drawn to gaps in the market and order blocks, breaker blocks, all kinds of stuff. Okay, I know you're not familiar with that stuff, but I just want to let you know that price is drawn to liquidity, which you know now, right? And price is also drawn to inefficiencies like that. Okay, so with that being said, we're going to go ahead and wrap up this video. And I hope you guys did enjoy this video. And what was I going to say? I forgot. Oh well, whatever. I'll see you in the next video. Video 4, guys. Dang, we're getting up there. This is literally, what is this? 11 minutes in too. I'm on a roll. I'm showing you guys how to concentrate with these markets and, you know, pursue these markets, guys, and really like know and read these charts to the fullest potential. So with that being said, guys, I'm going to wrap this up here. Hope you guys have a great rest of your day. I'm here with you all the way. Rylan signing off until you watch the next video right now. So see you soon. Peace out.